Bitcoin is holding up really well as Trump announces additional tariffs on China. Plus, we got a ton of macroeconomic data to talk about. And Fed Chair Powell is giving a press conference later today. In this video, we're going to talk about what this all means for Bitcoin and, more importantly, how you can navigate it. So stay toward the end of the video and we're going to talk about specifically how you can navigate this absolute mess. But before we get started, welcome back to the channel. My name's Doc. Throughout the day, I'm a resident physician, and at night and super early mornings, I take you guys on my crypto and investing journey. We got a lot to talk about. I feel like I say that every time, but gosh, it is true. Bitcoin right now sitting at $84,000. And we're going to talk about this more in a second, but huge tariffs announced just this morning. The White House, they're ratcheting up their tariffs to 245% as a result of its retaliatory actions against the US. More on that later, but specifically, we're going to talk about what does this mean for Bitcoin, right? What does this mean for Bitcoin? And honestly, my initial thought when I woke up and saw that headline is like, dang, Bitcoin's probably below $80,000. And to my surprise, Bitcoin's holding up really well, actually, like really well. We're above $84,000. Now, this is the daily chart. I'm going to switch this over to the 4-hour chart. And we actually have a little bit of a green candle within the last 4 hours since that news has dropped. And I'm going to give you kind of my take as to why I think that is towards the end of the video. So stay towards that. So Bitcoin above $84,000. You know, the past week or so, we've come all the way back from 74,000, right? We wicked down into the low 70s, which felt like not too long ago, literally 8 days ago. So it has been a nice little rally up. And in my opinion, the market could be exhausted of all of this bad news. We were actually talking about this in my Discord today. Link is going to be down below, completely free. We have nothing to sell you. We're just building an awesome community of like-minded folks. So if you're interested in that, link is going to be down below. But we were talking about this today on how like the market, they might just be exhausted of hearing about all these tariffs. Some other really interesting things are happening in the background as well. So Bitcoin, it actually wicked up to a new all-time high for Bitcoin dominance. I know it looks like it reached this prior wick. Well, it actually slightly edged it above, and we briefly, depending on which metric you look at, we briefly hit 64%, right? So we're getting closer to Bitcoin taking up 2/3 of the overall crypto market, right? That means that Bitcoin would have to be at 66%, which is, oh gosh, it's a little bit of a ways. Benjamin Cohen, yep, I already drew the line, so look at that. Benjamin Cohen seems to think like we're gonna hit 64%. That's kind of his target. And in hindsight, I think this could happen, right? We see these really big rallies in the past, and we've talked about how Bitcoin dominance can go both up or down, Bitcoin dominance can go up whether Bitcoin, the actual price of Bitcoin, goes up or down, right? So we're going to be watching this. We eventually need this to come down, right, for us to have our alt season. Put differently, we want Bitcoin to take up a smaller percentage of the overall market cap, because then that means alts are running, right? The other interesting thing here is this is global liquidity. And we're going to look at a chart here in a second that shows the price correlation between global liquidity M2 and Bitcoin. And guess what? It's been up and to the right. So we love that. We want that to continue, right? The argument becomes this though, and I tweeted about this a couple days ago. Global liquidity is measured in US dollars. Well, guess what, guys? The US dollar's cratering, right? It's absolutely tanking. So if the unit of measurement goes down, right, of course, global liquidity is going to go up, right? Or put differently, you guys are gonna get to see one of my really crappy drawings. But think about it like this: if this is the Dixie and it's the denominator, right? And we're saying this is M2, right? If this number is getting lower, because, right, we're saying M2 is measured in the US dollar, then obviously that's going to go up. Here's the thing. I think there's actually multiple things at play, right? I do think the dollar going down, which is a pretty clear downtrend here. I do think that is obviously helping them too, but we also know that China and the EU and Australia, this is again global money supply, they're printing like crazy. So it's probably both, right? The denominator or unit of measurement is going down, but also countries are printing a ton of money right now. So we talked about, okay, China, where the U.S. is increasing tariffs on China. Kind of the confusing thing about this, though, is that, the administration has said, oh, well, chips and computers and cell phones and these types of things, they're going to be exempt from the tariffs. But then Lutnick goes on this media run and he kind of muddies the water. So we're going to see how the market reacts to this, right? And I bet you we could pull up stocks right now. Okay, we could pull up stocks right now. I would be willing to bet. Stock market landed on the 50-yard line. S&P futures slide as a drop in NVIDIA shares. Well, that's a whole nother thing. Trump announced that NVIDIA is going to have to pay like $5 billion to send their chips to China. $5 billion is a significant amount of money, right? So futures, people aren't talking a whole about it right now. Okay, but I would imagine they are not going to respond well to these 245% tariffs that we're ratcheting up. And guess what? I think the writing's kind of on the wall in some ways. China's more than likely going to respond with increased tariffs against the U.S. And I can tell you right now, the S&P 500, it's not going to respond well to this, guys, right? The last time these big tariffs announced, it just cratered. So we're looking at the daily view now, and we've had a couple good green days, but guys, the S&P hit 4,800. We're almost at 47 right now. I suspect we're going to go down today. I'll be following this, though. That's why you guys follow me and subscribe to me, because I give you a fast, timely, reliable information that's easy to digest. So if you're getting any value of this, consider hitting the like button and subscribe. Okay, so we all thought, I saw this tweet a day or so ago, and it said, hey, China, they're kind of signaling that if Trump shows us some respect, he is going to start negotiations, right? They're going to appoint a lead negotiator. And then we announce this. So it's kind of, it feels like one step forward, two steps back. Maybe there's a larger plan at play that I'm not aware of, which could very well, be the case. But this kind of feels like, gosh, things were going the right way, only to then have this happen. Okay, so what macroeconomic data is being released today? Well, we have retail sales from March. Not going to be a big deal because a lot of this tariff shenanigans started after those numbers came out, but it will be telling nonetheless. More importantly, in my opinion, Fed Chair Jerome Powell is going to speak a little after 1 p.m. Eastern, right? So I'm actually going to follow Cycles with Batch here. I see him all over crypto Twitter, a lot of good information. So the market, here's what everybody's waiting for. It's going to be, does Powell have a dovish, i.e. a bullish tone to his speech, or is he going to have more of a hawkish, i.e. bearish stance on his speech? Jerome Powell already came out and said that, guys, this is important. He already said last week or a few days ago that the Fed is willing to help out if needed, right? If needed. So that was reassuring in a lot of ways. It's really going to be interesting to see what he says today. Now, I don't think he's going to give us any huge, breaking news pieces, but I do think he's going to give us some nuggets, right? And that is going to be important because he might flirt or talk about QT, right? So we're still in quantitative tightening. That is when the Fed is reducing its balance sheet, okay? Now, we slowed the rate at which we're reducing our balance sheet a couple weeks ago. It would be interesting to see if he flirts about us eventually stopping QT, right? And all that means is that we would stop reducing the balance sheet, the Fed's balance sheet, right? And they're doing that with mortgage-backed securities and treasury bonds, right? So we'll see. We'll see how that goes. Quantitative tightening is not great for risk on assets like Bitcoin because it kind of, the way that I think of it, it kind of sucks money out of the system, right? So we're going to be watching this. I'm going to be specifically listening, like, is Jerome Powell hinting at anything with QT, stopping QT, and then even like rate cuts? And guys, trust me, we're going to talk about rate cuts here in just a second. I thought this was kind of an interesting post. I felt obligated to share it. So Van Eck, now obviously they are biased. They have some skin in the game. That doesn't mean that they don't have good information, but they're proposing something called bit bonds. Now, this isn't entirely a new idea. This was floated a couple weeks ago, but it's starting to resurface again. Van Eck, they're proposing bit bonds. And what this is they would be for the U.S. to buy Bitcoin by refinancing their $14 trillion in debt. So, right, you'd have a bond investor. They need some protection from the Dixie, right? And they would see upside because these bonds would go out and buy Bitcoin. Now, why would the government do this? Well, they have a huge piece of the debt that they need to refinance. I've seen 14 trillion floated around. I've also seen 9 trillion float around. Either way, we need to refinance this interest rate. And it makes sense. This is 14 trillion over the next 3 years. I believe it's 9 trillion over the next year. And another reason that folks would do this is, like, guys, interest rates are still kind of high right now, right? We're going to actually, let's just look at the 10-year yield real quick. I should have it up. 10-year yield. Oh, not years, 10-year yield. Okay, right here. Guys, this is starting to increase again. And originally, Trump and Bissett, they said, like, they need to get the 10-year yield down. That's when all this tariff shenanigans started, right? And they were doing a good job, right? We went from almost 5%, right, 4.8, all the way down to like 3.8. So we dropped almost a full percentage, 100 basis points since these tariffs started. But then the negotiation talk came out, and guess what happened to the 10-year rate? It shot back up, right? It shot back up. So the reason, this is important too, guys, the reason that the 10-year bond rate went down is because more people were moving to bonds, right? While all this was happening, this was peak recession fear talk, right? Literally the last week or so, all you heard about was like, hey, recession's looming. People use bonds as a flight to safety. So the rate of these bonds came down because it's simple supply and demand, right? If a lot of people want to buy bonds, well, the government's saying, hey, we need to sell these bonds, but there's so much demand, we can offer lower yield. Well, guess what? The recession fears peaked last week, and now they're saying, like, hey, maybe we won't have a recession. Okay, less people want to buy these bonds now. And then the government says, hey, we have to offer a higher rate because not as many people are wanting to buy those bonds. That's obviously the simple, kind of watered down version of it. But really, in a lot of ways, that is exactly how it works. So we know that Trump and Bissett, they want to get these 10-year bond yields low. And the reason they want to do that is because 30-year mortgages and car loans and credit card interest rates are specifically tied to this 10-year rate, okay? So Americans are getting squeezed right now, right? Unemployment's relatively steady, but folks are getting squeezed with these higher prices, especially with all the tariffs. So we want the 10-year bond rates to come down because then that means it's cheaper to finance cars, houses, credit card debt, etc. Okay, so kind of an interesting concept here. Will this happen? I'm not as optimistic as Van Eck, but obviously they're a little more biased because they would likely be, involved in those products. So, okay, we can't talk about Bitcoin without talking about gold, right? So gold is the yellow line here, and gold's absolutely been flying, right? Gold has been flying. It's hit literally all-time highs. It broke above $3,000, and a lot of folks are saying, like, this could potentially hit $4,500 an ounce before the end of the year, right? So I think it's been flirting, low 3,000s. The interesting thing is Bitcoin historically lags gold, right? So, and this kind of makes sense in a lot of ways. If we go back to global money supply, right, and we get rid of all these silly drawings, we can see that the global M2 money supply has just been going up, right? It's been absolutely flying. We've been hitting new all-time highs. Well, guess what? Increased liquidity risk assets like gold and Bitcoin flourish in environments like this. Gold, they've been ahead of the curve, right? They've been flying. A lot of folks are suggesting, okay, Bitcoin lags gold. We could see a big jump up in Bitcoin. My thoughts on that are this. Yes, I do think this can happen. I really do think that Bitcoin can take its next leg up based off increased global M2 supply, right? Global liquidity and gold flying. But we need macro conditions to turn around a little bit. And the reason that I say that is because Bitcoin and the stock market, they're highly correlated, right? So this is a picture that I actually have pinned in the Discord. Again, it's free, link down below. That if these labels weren't here, you would have a hard time distinguishing between which is which, right? Now, obviously, Bitcoin is held up much better here compared to the stock market, right? The stock market's the red line, but nonetheless, historically, Bitcoin and the stock market have been very, very correlated. So, do I think Bitcoin can get back above and take this next leg up? Absolutely, I do, right? Gold is doing it. They're setting a good example for Bitcoin. The global M2 liquidity is flying. We need the stock market to get better first. Okay, so the other good things to talk about is like inflation data. We got these reads back last week, and inflation is way, way lower than expected, right? Way lower than expected. Both PPI and CPI data last week, inflation's slowing down, okay? This is really good, right? The reason that it's good is because it gives Fed Chair Powell, who again is speaking today at 1:15 Eastern, it gives him more ammo to cut rates, right? And that's really, really good for risk assets, right? Risk assets like Bitcoin love cheap money, okay? So this is happening kind of in the background. This happened last week, right? So the reason, just, you know, kind of a FYI is, right, when you cut interest rates, it could lead to more inflation, but this is not a concern right now because inflation is so low. Okay, poly markets, I just want to talk about this because I know we've been tracking in some of our last videos. They're saying there's a 54% chance of a recession. They're also mentioning that in May, there's an 84% chance that we do not get another rate cut, that Fed Chair Powell keeps the rates the same. Now, you might be thinking, Doc, what the heck is happening in May? Well, May 7th is the next FOMC meeting, and they're stating that, right, the Fed Watch tool is saying there's an 83% chance that we do not get a rate cut, okay? And the good thing is, if we don't get one in May, there's an 86% chance that we do get one in June. A lot of this is really going to depend on what Fed Chair Powell says today. Will he kind of tip his hand and give us any hints? Now, turbulent markets are good trading opportunities. If you guys are looking to trade the market on leverage, either longing or shorting, my BTCC link is going to be down below. You can get a 10% deposit on our 10% bonus on first time deposits, excuse me. This is a no KYC, no VPN. You can do huge leverage too. So they are a sponsor partner of the channel. So if you use my link down below, it helps the channel out. They're also like introducing a lot of new features, some isolated liquidity. We're going to talk about that more about that in my next video, but really interesting stuff happening with BTCC. I personally use them to put all of my leverage plays in, so check them out. Also down below, it's going to be my link, InvestWithDoc.com, if you want to get to know me a little bit more. So I'm genuinely curious, what do you guys think is going to happen with these increased tariffs directed against China, right? We ratcheted them up. It felt like we started at 15% and then we went to 45 or 50 and then we went up to 125, then we went up to 145 and now we're at 245%. It kind of feels like in some ways, and I'm trying to stay apolitical here, kind of feels like in some ways we're backing China into a corner and something's got to break at some point, I would imagine. So I'm genuinely curious. Let me know down below. How do you guys think China responds to this? I read all of the comments. Also, if you got any value out of this, a like would mean the world to me, right? It really helps out more than you know. And who knows, maybe even consider subscribing. But again, let me know down in the comments, what do you think China's, how are they going to respond? And how does Bitcoin respond? And I'll see you guys in my next video.